On the line with us today is Jeb Handwerger, publisher of GoldStockTrades.com. Jeb uses a fundamental and technical approach to understand the natural resource market and identify investment opportunities. Jeb, thanks for being on the line with us today.
Thanks so much for having me, Colin.
The market's been daunting over the past 2.5 years, but one area that's quietly starting to heat up is uranium. Jeb, you've shown a lot of interest in the uranium space over the past several months. What are the fundamentals in place that will drive the uranium market higher?
Well, the first thing I think that investors need to uh, look at China. We just had a news item coming over from China. Uh, Harbin, a city of more than 10 million people, had air pollution so bad that they had to shut down the highways, the airports. Uh, the air's toxic there. It's from this cheap, dirty coal they're burning. It's shortening the lives of Chinese people. The countries such as China need cleaner air. They're having a difficult time breathing, and in some of the areas, they're choking on deadly smog, and pressure is being put on the government to reduce air pollution, especially from a rising middle class who want to live longer and healthier lives. So the Chinese government's going to continue putting restrictions on the use of the dirty domestic coal, and they're going to need they're also going to put conditions on automobile emissions. So this is going to benefit demand for platinum and palladium, which is needed in catalytic converters, uh, but especially China is going to have to expand their use of nuclear power dramatically over the next generation to combat this dirty air problem. Remember, China's nuclear power generation is only a fraction of other countries such as the U.S. and France, but China is the leading the world in construction of nuclear power plants. So you're going to see a major shift over the next generation. You know, right now the U.S., France, Japan, Russia, South Korea, Canada, they're all ahead of China in terms of nuclear generation. But over the next generation, China's share is going to significantly increase. The same is true for India and Russia, who's building nuclear reactors. Even oil-rich countries such as the United Arab Emirates and Saudi Arabia are investing in nuclear to reduce dependence on fossil fuels. So what does this tell you when you're seeing oil countries with all the oil that they can imagine, and they're putting in nuclear power? This is telling me that investors should keep a very close eye on the sector. There's some key catalysts that are coming down the pike, such as the ending of the Russian HEU megatons to megawatts program at the end of 2013. This supplied close to 24 million pounds of uranium to the U.S. every year. This will be coming to an end. They're going to look for supply from mines. Now, uranium is already in a supply shortfall. We've had a little bit of excess coming from Germany and Japan, but that's about to change as Japan has now 14 reactors that are being applied to be turned back on. And this Russian HEU agreement could mean that there could be a supply shortfall in the short term. Now, even the big banks, such as J.P. Morgan, they're forecasting uranium prices at $90 in 2016. So now our spot price is below $40. So even from a conservative bank like J.P. Morgan, the next couple of years could be huge for uranium investors. And, you know, I've been through the 2007 market where uranium went up to $135 a pound after the Cigar Lake delay. Cameco again has announced that Cigar Lake is going to be pushed off. So there's factors that not only could we see a move to possibly $90 in 2016, but I think there's a lot of fundamentals in place to see something that could mirror the 2007 run-up. And that could be there could be gains for uranium investors, exponential gains, if we see that again.
You know, you're answering some of my questions before I even ask them, but to touch on a little bit more about the potential gains, the uranium sector can offer investors tremendous returns because there are so few companies for investors to choose from. And in the past, when capital has rushed into the sector, many uranium exploration companies skyrocketed by several 100% in a very short time frame. Um, so you see that this could happen again, and it could happen shortly here.
Yeah, well, all the commodities have been correcting for 3 years. I mean, it's pretty much across the board. As a global economy is dealing with a recession from the debt deleveraging from the 2008 credit crisis. We're still dealing with that. But uranium has been hit even exceptionally harder than the rest of the commodity space because you had the Fukushima disaster in 2011 and it caused public sentiment to shift extremely negative. We saw some knee jerk reactions out of Germany. We saw knee jerk reactions out of Japan. Um, and the shares of the mining stocks extracting or near production or producing or even exploring for uranium have been sold down to literally pennies on the dollar. But there's some signs that the uranium market is turning. We've seen Australia vote for the Western Australia. They ended the uranium ban in Australia. Last week we heard Greenland is going to stop the ban on uranium. We saw major volume coming into the uranium mining ETF. This past week, we saw Cameco, which is the largest publicly traded uranium miner. They attracted a lot of interest when they reported earnings that actually showed gains and profits, even as spot uranium prices held 8-year lows. That's very significant when you see a bellwether like Cameco and the market being surprised that a uranium miner can actually be profitable in this environment. Imagine what Cameco can do when uranium is more towards the long-term price, like at $50, or like what JP Morgan's saying at $90. Think about what sort of profits, if they can make profits when spot uranium prices are at 8-year lows. Just imagine what sort of profits they can make when uranium is once again on an upward trajectory. So there's there's great opportunities in the uranium space because the sector's been beaten down to such low levels, and because the majority of investors have really not studied or examining the fundamentals and the basic fundamental that there's more nuclear reactors being built today than there was before Fukushima. That's the basic fundamental, and they've been confused, misdirected into other areas. But the fact remains that uranium over the next generation there's going to be a supply shortfall. The uranium prices are going to move higher, possibly much faster than people realize, and it could make incredible impacts on some of the junior uranium miners, where there's really so few that are out there right now that actually have survived and that are actually, near production or in production. If some of these companies that started off in the previous cycle are still here and they still have cash and they're still coming to production, that's a great. Those are going to be survivors, and they're going to actually, I think, going to have phenomenal runs once this sector and people realize the basic fundamentals in the uranium sector.
In the Athabasca Basin, there's been a tremendous amount of new activity, particularly following the Patterson Lake discovery. What is so unique about the geology in the Athabasca Basin, and what's driving the influx of investment capital right now?
Well, the Athabasca Basin, I've been following the Athabasca Basin for years now, and I've been following companies like Fission and Denison and Hathor since they were taken out by Rio Tinto. Uh, what's interesting, and when I saw the Hathor acquisition back in 2011, Rio Tinto purchased Hathor uh, for good value, very good valuation. And it wasn't Rio Tinto didn't make a move like this in merger M&A activity for a long time. And this was their first move since the credit crisis. And it showed to me that the big boys wanted to have access to some of these Athabasca deposits. And what's so critical about these Athabasca deposits is the grade. The grade is phenomenally much more higher, exponentially higher than the rest of the world. And grade is crucial to these big industrial giants. And the Athabasca Basin has mines there like the MacArthur River mine uh, and some of these large, massive mines that have produced millions of pounds of uranium. And Rio Tinto is moving in there, and they actually bid with Cameco. Since that time, we've seen even more M&A activity. We saw fission and get for the Waterbury deposit. They were bought out by Denison. Denison's made a huge discovery at the Phoenix deposit, the Wheeler River. Fission, after they were taken out by Denison, they made a discovery on the west side, a different on a different not the more popular, the west side, a whole new area, the Patterson Lake discovery, and now they're acquiring Alpha for $185 million. So the Athabasca Basin has been, even in a tough spot market, uh, the toughest uranium market, 8-year lows. I mean, we're seeing all high valuations, investor interest, and great opportunity to build value for shareholders, even in one of the worst commodity and mining markets that many can ever remember.
Talk to me about some specific companies that you're following right now, and maybe let's start in the Athabasca Basin if there's any stories there.
Well, I'm following first off the Fission and Alpha story is a the Patterson Lake South discovery is truly historic. Denison on the east side of the basin at the Wheeler River is also making a historic discovery, a high grade discovery. So those are both takeout targets for larger entities such as Rio Tinto or Cameco. Um, we're also looking at some of the smaller explorers, and the key is connecting to the right management teams. Um, the management team behind the Fission story, and that helped discover both the Waterbury and the Patterson Lake South. Jody DeRouge, he's the exploration manager up at Lakeland, and he was one of the guys that told the Fission team to go west and to look at this Patterson Lake area where they found a lot of success. Now he's telling Lakeland to go up to the northern part. So we're following Lakeland Resources as one of the smaller plays. So Denison, Fission, and Lakeland.
And Lakeland's a story that not too many investors are aware of. It's a very small market cap, very early stage. What can you tell us about Lakeland's strategy moving up into the northern part of the basin and some of the assets that they're holding on to right now?
Well, it's still early stage, and you know, Jody DeRouge, who was critical in the Fission J Zone discovery and both uh, the Patterson Lake discovery, um, there are some beginning signs. The northern part has been underexplored, and there hasn't been a lot of testing there. It's not a traditional area, sort of like what Jody may have said with the west part. So, Jody would probably be able to give you the best on the geological data, uh, but we're excited for to see that Jody has another chance to make another exploration success.
And moving outside of the Athabasca region, I know you've been following your honors for quite some time. They're in the development stage of actually building out their ISR mine. Talk to me about your honors and any other companies you're following in the uranium sector.
Uh, really, when you're looking into investing in the uranium sector, you're first looking at the uranium producers, and then you look at the near-term producers or the emerging producers. One that we find is one of the best opportunities, and we think is really being eyed by the majors is your honors. The state of Wyoming has been very supportive to the in situ uranium miners. In situ uranium miners, they can produce uranium at a very low cost, uh, and uh, and the state of Wyoming has been very supportive in permitting uh, and helping finance some of these mines with low interest rate loans. So Your Honors is just on the verge. They're in construction of the Nichols Ranch mine. They have a processing agreement with Cameco at the Smith Highland Ranch down south of their project. Cameco's there. It's one of their largest mines in the U.S. They have offtake arrangements, agreements with two large U.S. utilities, including one of them is Exelon, which is the largest U.S. nuclear utility. And those offtake agreements are at contracts that are they were done when uranium was at a higher price. So there's some security there. So with potential cash flow, etc. So as they come closer to production and as they enter production, we believe that they're going to be re-rated, and U.S. supply is so critical. I mean, only 4 million. They can U.S. consumes about 55 million pounds of uranium a year. That powers up to about 20% of their electricity. Yet they only produce about 4 million pounds, or 4.5 million, the last time I looked, of uranium. So there's going to be a need for additional uranium producers.
On that note, let's hope for good markets and natural resources moving forward. Thanks for joining us, Jeb, and hope to have you back here soon.